Hey guys, welcome back to the channel. My name is Mac Rogers. I'm a real estate broker here in the San Francisco Bay Area. On my last video, I talked about the latest numbers for California from the California Association of Realtors. You can find that video here. Basically, the number of transactions for California is going down on a month-to-month and year-over-year basis, while home prices are still setting record highs. In today's video, we will look at the latest numbers for the US from the National Association of Realtors. And guess what? What's happening in California is happening nationally as well. For the third consecutive month, existing home sales dropped again. The drop was not big, only 2.4% for the month. This could be just like in California because we are in spring and summer selling season, which is normally the busiest season for real estate. Year over year, the decline was almost 6%. Among the four major US regions, the decline in sales was split. Two areas posting gains and the other two experiencing a slowdown in April. But on a year-over-year basis, sales slowed down on all four major US regions. Here are the numbers. Total existing home sales, meaning completed transactions. This includes single-family homes, townhomes, condos, and co-ops. It went down 2.4% from March to a seasonally adjusted rate of 5.61 million in April. Year over year, sales dropped 5.9%. Just like in California, higher mortgage rates and high home prices are the main culprit. Listen to what Lawrence Yun, NAR's chief economist, had to say about this. Higher home prices and sharply higher mortgage rates have reduced buyer activity. It looks like more declines are imminent in the coming months and will likely return to the pre-pandemic home sales activity after the remarkable surge over the past 2 years. This is exactly what is also going on in California, and like I said on that video, we can pretty much count on more slowdown in the coming months. Let's look at the inventory numbers. Total housing inventory at the end of April was 1,030,000 units, up 10.8% from March and down 10.4% from 1 year ago. Unsold inventory sits at 2.2 months supply at the current sales pace, up from 1.9 months in March and down from 2.3 months in April of 2021. These numbers, we can say, are doing a little bit better. An increase in inventory is severely needed. It's a bit slow if you ask me. Month to month, yes, we are up, but still down when you compare it to the same time period last year. One thing that I've said on my past videos, and this is being echoed by Lawrence Yun here, is that how this market is a bit unusual. It's unusual because the total number of sales transaction or volume is going down, but homes are still selling fast and still higher from last year. Normally, when things slow down, that would mean that demand is slowing down and you start to see price adjustments. The reality is that even with less buyers out there currently, it still outpaces demand. Another thing that is starting to take off, according to the National Association of Realtors' recent report, is that ARM or adjustable rate mortgages are starting to be popular again. Buyers that have a time horizon of 5 years or less are opting for these types of loans. In terms of price, like I said, there is no relief there yet. The median existing home price for all housing types in April was $391,200, up 14.8%. That's almost 15% from April of 2021. Prices in all regions increased, and if you've been keeping track like I have, this marks 122 consecutive months of year-over-year increases, the longest running streak on record. And I'm going to go out on a limb here. I think we see 123 next month. Like I said earlier, properties are still selling fast. Properties typically remained on the market for 17 days in April, equal to both the number of days in March 2022 and in April of last year. 88% of homes sold in April 2022 were on the market for less than a month. In terms of buyer mix, here's the breakdown. First-time home buyers were responsible for 28% of sales in April, down from 30% in March and from 31% in April of 2021. Normally, or on average, this number is around 34%. That means a lot less first-time home buyers out there. All cash sales accounted for 26% of all transactions in April, down from 28% in March and up from 25% recorded in April of 2021. Individual investors or second home buyers who make up many cash sales purchased 17% of homes in April, down from 18% in March and the same number in April of 2021. Distressed sales like foreclosure, short sales, again, this is still a non-issue. It represented less than 1% of sales sales in April, equal to the same percentage in March, and down from 2% in April of 2021. Mortgage rates are a big key right now. According to Freddie Mac, the average commitment rate for a 30-year conventional fixed-rate mortgage was 4.98% in April, up from 4.17% in March. The average commitment rate across all of 2021 was only 2.96%. Here are the cities with the top 3 largest year-over-year median list price growth. Miami up 38.3%, Las Vegas up 32.6%, and Orlando up 30.7%. Austin reported the highest growth in the share of homes that had their price reduced compared to last year, 6.8%, followed by Las Vegas 5.3%, and Sacramento 4.7%. That means in these places, price reductions are starting to occur. Las Vegas is kind of weird being that it's on the top 3 of the largest year-over-year median list price growth, and yet it's also showing signs of high price reductions. Go figure. Now, here are the numbers in terms of the breakdown between single-family, condos, and co-op sales. Single-family home sales decreased to a seasonally adjusted annual rate of 4.99 million in April, down 2.5% from 5.12 million in March and down 4.8% from 1 year ago. The median existing single-family home price was 397,600 in April, up almost 15% from April of 2021. Existing condos and co-op sales were recorded to a seasonally adjusted annual rate of 620,000 units in April, down 1.6% from March and down 13.9% from a year ago. The median condo price is up 13.1%. And finally, the regional breakdown. Existing home sales in the Northeast rose 1.5% in April, reaching an annual rate of 670,000, a 10.7% drop from April of 2021. The median existing home price up 8.1% from 1 year ago. Existing home sales in the Midwest grew 3.1% from the prior month to an annual rate of 1.3 million in April, a 1.5% slide from April of 2021. The median existing price in the Midwest up 8.7% from 1 year ago. Existing home sales in the South fell 4.6% in April, and it also dropped 5.7% from 1 year ago. The median price in the South was 352,100, up 22.2%. For the 8th consecutive month, the South recorded the highest pace of price appreciation in comparison to the other 3 regions. Additionally, the South is the only region to report year-over-year double-digit price gains. Existing home sales in the West dipped 5.8% compared to the previous month and also down 8.1% from 1 year ago. The median price in the West was up 4.3% from April of 2021. That's the latest report from the National Association of Realtors. This is the April existing home sales report. To recap, existing home sales fell for the 3rd straight month. Sales were down 2.4% from the prior month and 5.9% from 1 year ago. Demand is slowing down, which is resulting in inventory of unsold existing homes going up. And the median existing home sales price increased at a slower year-over-year pace of 14.8% to 391,200. There's this talk of inventory coming back to pre-pandemic levels, but I have to tell you, that's nothing to be excited about. Before the pandemic, we were already severely short of housing supply. So going back to those levels won't make an impact, especially for those buyers that are looking for cheaper housing. A slowdown seems to be inevitable. Right now, I guess we can say that the writing is on the wall. Mortgage demand or mortgage applications, meaning the number of people applying for loans, is down by 12% as mortgage rates hit a 13-year high. Another kind of side effect of this mortgage rates going down and having less buyers out there are home builders slowing down their construction. You see, they don't want to be left holding the bag like when we had the mortgage meltdown. For the 2nd month in a row, new home construction slowed down, and this is because of higher mortgage rates, record home prices, and the high cost of building materials. And this is why most economists are not projecting any kind of housing crash. We are not adding inventory or enough inventory to meet the demand. The number of new permits to build home is down 3.2%. New housing permits is a leading indicator of how many houses are likely to be built in the months ahead, assuming a stable economy, which we do not have right now, and most economists are forecasting a recession. Now, here's the one thing every homeowner needs to know about a recession. Listen up. A recession does not equal a housing crisis. That's the one thing every homeowner today needs to know. Everywhere you look, experts are warning we could be heading towards a recession. And if true, an economic slowdown doesn't mean homes will lose value. The National Bureau of Economic Research defines a recession this way. A recession is a significant decline in economic activity spread across the economy, normally visible in production, employment, and other indicators. A recession begins when the economy reaches a peak of economic activity and ends when the economy reaches a throw. Between the throw and the peak, the economy is in expansion. To help show that home prices don't fall every time there's a recession, take a look at the historical data here. There have been 6 recessions in this country over the past 4 decades. As the graph shows, looking at the recessions going all the way back to the 1980s, home prices appreciated 4 times and depreciated only 2 times. So historically, there's no proof that when the economy slows down, it doesn't mean home values will depreciate. The first occasion on the graph when home values depreciated was in the early 1990s when home prices dropped by less than 2%. It happened again during the housing crisis in 2008 when home values declined by almost 20%. Most people vividly remember the housing crisis in 2008 and think we were to fall into a recession, that we'd repeat what happened before. But this housing market isn't a bubble that's about to burst. The fundamentals are very different today than when they were in 2008. So we shouldn't assume that we're heading down the same path. Bottom line, we're not in a recession yet, but if one is coming, it doesn't mean homes will lose value. History proves a recession doesn't equal a housing crisis. And if you keep waiting for prices to fall, how's that working out for you? Hey, thanks for watching. If you're thinking of buying or selling a home here in the Bay Area, give us a call, a text, or an email. We would love to help you out. Have a great day.